PayPal stands as a colossus in the digital payment arena, boasting a market valuation of over $84 billion. The company's financial trajectory has been remarkable, with its annual revenue soaring to $27.5 billion in 2022. A decade ago, PayPal, then an integral part of eBay, was at the forefront of digital payments, setting the standard for secure online transactions in the e-commerce sphere. However, the company's journey in the stock market tells a contrasting tale. Despite reaching unprecedented heights during the pandemic, PayPal's shares have encountered notable declines. In a significant move, the company announced in January the layoff of 2,000 employees, about 7% of its workforce, reflecting a shift in its operational strategy. PayPal's profitability and rapid growth during the pandemic were propelled by the global shift towards digital transactions. But now, there's a noticeable deceleration in its growth. The central question emerges: what factors are driving this slowdown? Drawing parallels to IBM, a once dominant force in its industry, we're compelled to ponder if PayPal is facing a similar trajectory, where organic growth prospects begin to wane. This video aims to unravel the complexities surrounding PayPal's current state. Will PayPal's stock rebound, or is this a sign of a deeper shift in the digital payment landscape? PayPal's journey to becoming a digital payment giant began with its initial public offering in 2002 at just $13 per share, quickly followed by eBay's acquisition for $1.5 billion. eBay's integration with PayPal wasn't just about having a payment solution. It was about creating a seamless checkout experience that gained consumer trust and confidence. During this alliance, a staggering 60% of PayPal's revenue was generated from eBay transactions, underscoring the importance of their partnership. This foundation laid by eBay was instrumental for PayPal, especially in the early days, where scale is critical for any payment processor. However, by 2014, the paths of PayPal and eBay diverged, leading to PayPal's independence as a separate trading entity. This split marked a new chapter for PayPal, allowing it to expand into various digital payment avenues, including peer-to-peer, P2P transactions, and merchant services beyond eBay. Strategic acquisitions like Venmo and Braintree in the mid-2010s were indicative of PayPal's broader ambitions in the digital payment landscape. Post-separation, PayPal's growth accelerated, surpassing eBay in annual revenue. This independence was crucial, enabling PayPal to cater to a wider array of e-commerce platforms and marketplaces. Today, PayPal's business model predominantly revolves around transaction revenues, with about 90% of its profits coming from fees charged to merchants and consumers per transaction. Total payment volume, TPV, has become a vital metric in gauging PayPal's growth and its significance in the e-commerce ecosystem. The pandemic further catalyzed PayPal's growth, with annual revenue jumping from $17.8 billion in 2019 to over $25 billion in 2021. The surge in digital payments, driven by lockdowns and a shift to online shopping, placed PayPal in an advantageous position, leading to substantial volume growth during this period. PayPal's stock trajectory took a downturn as pandemic restrictions eased, erasing its pandemic gains within a year following a series of disappointing earnings reports. The company, a clear beneficiary during the pandemic, saw a shift in investor behavior post-pandemic, with many selling off their winning stocks. This change reflects a market heavily focused on near-term growth. The assumption that e-commerce growth would continue at significant levels began to falter. At the pandemic's peak, e-commerce retail sales in America reached 16.4% of total sales. However, in the subsequent years, this growth stabilized, remaining under 15%. The forecast for e-commerce growth over the next 3 to 5 years hovers around 10% to 15%, a decline from the pre-pandemic rate of 20% to 25%. As lockdowns lifted, consumer spending patterns shifted back to in-person transactions, with some even reverting to cash. The impact of inflation put additional pressure on discretionary spending. E-commerce, often viewed as discretionary, competes with essential services and other expenses in consumers' budgets. While PayPal's total payment volume, TPV, continues to grow, its pace has slowed. Competition has intensified with major tech companies and banks launching their own online payment platforms. PayPal's heavy focus on e-commerce is both a strength and a vulnerability, as the area is a hotbed for fintech innovation and investment. Before the pandemic, options like Shopify's Shop Pay and Amazon's Checkout with Amazon Pay were less prominent. However, these platforms, along with formidable competitors like Apple Pay, have gained significant traction, particularly during the last holiday shopping season. PayPal's growth was also impacted by the end of its operating agreement with eBay in 2020. This agreement, which had allowed PayPal to remain eBay's primary payment partner for 5 years post-separation, contributed significantly to PayPal's revenue. Its termination coincided with a broader deceleration in PayPal's growth. Despite recent challenges, PayPal's influence in the fintech industry remains significant. There's a general consensus that the company is currently navigating through some rough waters, but its long-term prospects continue to shine brightly. While its status as the unrivaled leader in digital wallets and payments might be shifting, PayPal is still strategically positioned for growth alongside the e-commerce sector. PayPal's current focus is on long-term growth, weathering the near-term market conditions and economic uncertainties. However, this doesn't imply that PayPal is a safe bet in a volatile market. If an economic downturn occurs, PayPal stocks are likely to be affected, but the company is laying the groundwork for long-term strategic initiatives that could enhance both revenue growth and adjusted EBITDA margins. During its 2022 second quarter earnings report, CEO Dan Schulman emphasized PayPal's ability to control spending and its impact on earnings growth, despite macroeconomic uncertainties. Experts believe that PayPal's next strategic move should be a focus on its core strengths, like Venmo, which continues to be a promising asset for the future of digital wallets and consumer banking, especially among Gen Z and millennials. A key element shaping PayPal's future trajectory is its leadership change. Dan Schulman, who steered the company as CEO since 2015, leading it through significant growth and share value increase, had announced his retirement plans for the end of 2023. With the announcement of Alex Chriss as his successor, effective from September 27, 2023, a new chapter begins for PayPal. Chris's leadership will be instrumental in determining if PayPal can regain its preeminent status in the digital payment arena. This transition in command occurs at a critical juncture, as PayPal faces heightened competition and escalating investments from its market rivals. Remember to like, subscribe, and share your thoughts in the comments on what you believe the future holds for PayPal. How do you think the change in leadership will impact its strategy and position in the market? Stay tuned for more insights into the evolving world of digital finance.